But Arvind Sanger is now joining us on the show, managing partner at Geosphere Capital Management. Thank you very much, Arvind, for joining in. Lots of potential catalysts to look ahead to. It's the US September CPI data, and this will be the big economic cue before the FOMC meet next week, and then the Trump-Xi Jinping meeting on the 30th, that's next Thursday. That's been confirmed by the White House. And it will be the first in-person meeting between the two since 2019. And the timing is also important because 1st November is when Trump has threatened to impose those additional tariffs on China, export curbs, etc. So how are you seeing the turf right now? Take it from the top.
There's a lot to unpack there. Obviously, the CPI data that will come out will be interesting because we've had such an absence of data. So that'll be helpful in framing the Fed decision-making next week. We're hopeful of not any big surprises, but we have to wait and watch. The expectation, obviously, is that Fed is going to go 25 basis points, and unless there's a big shock in the CPI data, I think that's more or less confirmed. And then, as you mentioned, the Trump-Xi meeting next week is also critical in terms of lessening some of the market fears on the trade tensions. And while President Trump uses a lot of bluster, it's clear that with China, with everything that he's tweeted, he wants a deal. And so the hope is that they will find some common ground. But it's not risk-free because I suspect China is prepared to play hardball and not give in too easily. So it's going to be an interesting one to watch. Hopefully, they'll find a middle ground, which is a win-win, which both sides can declare as a win-win. But there's clearly some uncertainty as to how that'll play out. So I think, to me, that is the more critical one. The Fed decision is more or less cast. That is cast in stone. I think the market is slightly nervous that there's some uncertainty there. And now oil is starting to move, and President Trump is fine with $65 oil. But if it gets above that, and Brent, just got above that, then I think he starts to get uncomfortable. So we'll see what comes out of the White House on the oil front.
Oh, yeah, absolutely. And that's critical for India as well. Arvind, hi. Great to be speaking with you. Season's greetings. Hope you had a fantastic Diwali. How do you view this latest, Diwali diplomacy between New Delhi and Washington? And there's no official confirmation, right? The Indian side hasn't confirmed that they're indeed dialing back on Russian purchases, but there have been some reports indicating that could be in the offing. Well, let's say that there is a thaw, there is, some kind of a breakthrough. I mean, is that going to be a mega market event? Do you expect foreigners to quickly gush into the Indian market, or will it be more measured? What are you expecting on the trade front and then the market reaction?
Well, I think we've been hearing that it's imminent, and President Trump keeps tweeting every few days how Prime Minister Modi has agreed to stop Russian oil purchases. And it was interesting this time you didn't get a direct contradiction from the Indian side. So maybe there's something brewing. And today we got news that China may be lessening its purchases because of the announced sanctions on a couple of the Russian oil companies, Rosneft and Lukoil. So I think that if there is some, lessening of purchases by India, and that satisfies President Trump to be able to declare victory and to be able to, sign off on a deal, I think the deal is probably more in President Trump's court than it is in India's court in terms of, getting some pound of flesh, whatever it is that he needs. My hope is that we're very close. And to your question about the market, I think the market will definitely benefit from it. And I think it'll definitely take India off the hot seat and therefore cause investors, to the extent that they've been on the sideline for that concern, to come back in. So I think it will be a positive for the market. I think it'll be a positive for FIIs. And I think for domestic investors too. It's a headwind that the Indian economy does not need.
Okay, all right. Hi, Arvind. Good morning and good to see you again. The domestic flows have been very, very rock solid. And to be fair, the domestic money has shown some maturity, particularly, a lot of the retail audience that have recently come into the market. But the big delta could actually come in with regard to the FI flows. So we hopefully see that in the time to come. That said, with regard to the Indian markets, there are pockets that still offer a lot of value. Where do you see that? If you could give us your top two sectors that you're looking at here in the Indian markets.
Well, you mentioned the bank Nifty has had a big move,
Yes.
but some of this, some of the NBFCs are still interesting to us. So that's an area that we find interesting. And I think, the domestic consumption-related stories more on the infrastructure side, more on the, steel, cement, some of these sectors that are going to benefit. Even the power sector, we've started to see signs that, demand is improving, steel demand is improving. So there are sectors that are dependent on, domestic confidence coming back. And then we have not looked at the export sectors. Those have been largely shunned by us and I think by the market. And some of the export-oriented sectors like auto parts could be big beneficiaries. That's an area that is looking attractive from a medium to long-term standpoint.
Would you buy the exporters then, the auto ancillaries, in anticipation that at some point of time a deal is going to be struck? Or would you wait for the news and the nuances?
I think the right answer is there's desire on both sides to do a deal. I think it is better to dip the toe in now rather than wait for everything to be clear, because by then the stocks will have moved a lot.
So ancillaries that you would be interested in to play the policy arbitrage, if you want to call it that, or what else?
Well, I think other than we are not looking to only play the policy arbitrage. We're looking to play sectors that we want to own for the medium and long term. So therefore, I think the auto parts story is partly domestic facing, partly export facing. We own almost nothing, and even before this tariff, purely export oriented industries. We are much more interested in the India story. So there's things like India healthcare, which is really not affected by what's going on. But we've been much more focused on that. So it's not going to cause us to suddenly go buy pharma companies or IT service companies. We're more India domestic demand facing, but the auto sector is one where the auto parts have both a domestic demand story and an export story, and we like those kind of companies.
Okay. All right, Arvind, we'll leave it on that note then. Thank you so much for joining in. Good to get your perspective. Have a good weekend, and we look forward to connecting again soon.